Hi guys, welcome to Silvia Berok with silviaberok.com. In today's video, I'm going to talk with you about risk management. Risk management is, in my opinion, very important, and unfortunately, I see a lot of traders every day losing their accounts in a matter of days or weeks only because they don't know how to use proper size and how to use risk management in their trading strategy. Before we start, guys, make sure you subscribe to my channel and also check out my free chat. We have a lot of successful swing traders out there who are trading every day for a living and sharing their ideas, and this chat is for free, guys. It is a great way to connect with other mindful traders and with other traders who are willing to help each other and of course see different ideas and mindsets. Now, before we start, there are a couple of questions which we want to answer before we enter a trade and before we build our portfolio. So, for example, one of the questions are how many positions do you have currently based on your portfolio? So, depending on where the market is currently, you can have 10, 20 positions, depending on your account size, 30 positions. But it is very important to understand what is the current market cycle, and especially if you are at highs, and if we are at very overbought levels for a long period of time, it is very dangerous to continue building positions without taking profits. We all have seen that the market goes up with the stairs and goes down with the elevator. So in that kind of environment, what will happen if you have, let's say, 20 or 50 positions? You are going to lose your profits, and this is very frustrating. You might even end up red because you could start panicking, and depends where you are entering the market, you can really screw your whole performance based on that. So it is very important to understand, based on the current market situation and market cycles, how many positions as a trader am I able to open? Should I open? Should I reduce my long exposure, or should I keep building positions because I see potential in the current market? So this is the question number one, what you should ask yourself before keep building new positions. And always think about taking gains on the way up, realizing some profits. This is very helpful, of course, for your psychology as a trader, and you will on this way, of course, realize some profits and not give everything back in case things go to hell all of a sudden and we take the elevator down. So now the other question what you should ask yourself is, like I said, are you willing to accept the worst case scenario? So let's say you bought you have 20 different positions in 20 different stocks, and you started buying those positions at the market high, and all of a sudden the market starts dropping 5-10%. We have seen that in the past. In very volatile times, this is not unusual, and this could happen over and over again. So if you bought at the highs and if you open 20 positions in different stocks and the market drops very fast, you are going to lose a lot of money and a huge percentage on your account. So it is important to understand that, and before entering a trade, it is very important to understand your whole risk. Are you willing to accept this worst case scenario which might happen? And a lot of traders out there are not willing to accept that. Unfortunately, guys, I see that a lot of times that people open a lot of positions with big size, the market starts dropping, they start panicking, and they start losing money very fast. So it is key here to understand those factors and how to calculate your risk and when to risk more or less. The next question which you should ask yourself is, of course, is that risk on or risk off market? In risk on market, the market is in an uptrending cycle, everything is going slowly up, and you have tiny corrections, not a huge drop. So this is a risk on market, you can just risk more, you can build positions, and of course scaling in and out on the way up. In the risk off market, things are going very volatile. We are entering from an uptrending, very slow market cycle to a very volatile and crazy market cycle where you have a lot of choppiness, huge ranges. So in this kind of environment, you should be careful, you should wait it out. And this basically means that this is a risk off market. You cannot have 20 or 30 open positions in this kind of environment like in an environment where you can build your position because the market goes up slowly. So it is key to understand when is risk on market and when is a risk off market. And the last question which you should ask yourself is, of course, how do you deal with gaps? We know that when we are trading stocks, sometimes news happen overnight. A CEO makes some decision, or they make some kind of offering, or something all of a sudden happens, and some of those stocks can drop 5, 10, 20% overnight. And what will happen is you're going to wake up the next day and see that your position is down 20%. So what are you going to do in this case? Are you willing to accept this risk? And here is something where it's very important to understand for you guys, because if you are with too big size in those stocks, and if the stock drops overnight 20%, you are not able to react. You will not know what to do. In worst case scenario, your account will go to zero, let's say. So this is one of the reasons why I always preach to start a small position, and you can always add to your position. If the stock goes to the next support level, you can always add, even if the stock continues to go up on a breakout. It is important to leave yourself a little bit room for errors, and even if something bad happens overnight, you will still be able to react, and you will find a way to get out of this position or manage this position. If you're in this, let's say, in a position with too big size and the market or the stock drops 20%, first of all, you will start panicking, you will not know what to do, and you will be focused only on your P&L instead of the chart, and instead of finding a solution how to manage this trade and loss. Now, in this example, I want to share with you, based on AMD, how to calculate your risk and how to calculate how much of your account you can risk. So let's say you see this chart over here, and this is a perfect setup which I'm teaching my pro members. So if you see this kind of a setup, everything is right at support. We have very strong stock with very strong fundamentals. And you want to enter this stock here around this support area, and let's say your entry should be at 76.50 and your stop should be below the support area at 72.50. In this case, your target should be the previous high, which is 93. Now, based on your account size, you should calculate your size, position size, and this is something I want to share with you. This is very basic and very easy, but unfortunately, I see a lot of the people out there who just ignore that, or maybe just they don't know how to calculate that. That's why I'm going to break that down very easy for you to understand how I do calculate my positions. So, like I said, let's say, for example, you have a $10,000 account size and you want to risk 1% per trade. This would be $100. Now, after you know that your entry is at 76.50 and your stop is at 72.50, you know that you're risking $4 per share. Your exit and target is 94, like I said, so you are going for 17.50 per share. You have a risk reward here of 1 to 4. This is a very good risk reward, and it is a great trade because you're risking $4 per share to make 70.50 per share. So this is a great risk reward. Now, of course, if you're risking 1% or $100 per trade, you should be able, based on that here, to calculate how many shares can you buy. And in this example, if you're risking $100, you should be able to buy 25 shares of AMD. So this is here, guys, very important, because we have right now AMD, which is a not too expensive stock. And I hear a lot of times people who tell me, oh, Sylvia, Doku is very expensive, I cannot buy that, it's like 240, I don't have such a big account. Well, I have to tell you, this is not true. You can buy this, but you have to use just less shares. Instead of using 25 shares, based on this calculation, you can buy any high-priced stocks with this with 10,000 account size. You only won't be able to buy too many shares, but the math is the same. So you can buy, instead of 25 shares, you can buy, let's say, 5 shares. Of course, risk based on that, you're $100. So always do the math. Even with high-priced stocks, you are able to buy and trade them. The only difference here is that you won't be able to buy as many shares because you will have, let's say, stop of $20 and target of $50 or $60. In this case, you can only buy 3 or 4 shares. So that's very important thing here, guys. It's important to understand how much do you want to risk per trade, how much do you want to risk on your whole account. So for example, like I said, if you have, let's say, 10 or 20 positions, you should be aware that if you're risking 20 positions and 1% per trade, you are willing to lose 20% of your account in worst case scenario, and you should be okay with that if you are going into trades like this. Always make sure that you feel good with the amount which you're risking, and always make sure that you know what is the worst case scenario, what could happen. Because like I said, sometimes the stock just gaps down, sometimes the market just continues to bleed because of coronavirus, because of some news. You never know what is going to happen, and you should always be prepared for the worst case scenario. Never be too optimistic in the markets, because every time you think you know everything and you are big size in some stocks, all of a sudden something bad happens, and this is the point where a lot of people unfortunately lose their accounts and they lose confidence, and they are not able to recover anymore, and they are not able to trade anymore because they don't have the mental stability for that. So that's it for now, guys. Thanks for watching. I hope that helped you a little bit to understand how to calculate your position before entering a trade, how many positions should you take based on the current market, and I hope you learned something new. Hit the subscribe button and leave me a comment. Bye bye.